All right, let's talk about your exit strategy now. Remember, we're going to choose our exit strategy before we make our offer. Have we all agreed on that? If the property's a junker, we're basically either going to wholesale it, we're going to retail it, which certainly requires long-term funding. We're going to sell it on terms, which either with repairs or sell it on terms without, as is. Either way, that requires long-term funding. Anytime you sell on terms, you need to have long-term funding on the house. The simplest way to acquire that long-term funding is to buy subject to. You take over the existing mortgage so you don't have to originate a new one or bring a private lender to the table or anything. You just take over the existing mortgage. Well, that does require that there is equity. Could we sell a junker on terms as is? Could we do that? Absolutely, we could. The strategy is sometimes called sweat equity or work for equity, where the buyer comes in on a lease option agreeing to do the repairs. It's a powerful strategy, especially now. There are a lot of folks that are capable and willing to do the repairs and who like the idea of getting a discount on the house, who cannot go to the bank because their credit's trashed. It's a perfect strategy. And what happens is you can take that junker house that you might have otherwise wholesaled at a deep discounted price. You can take that same house and sell it for much closer to retail by using that work for equity strategy. So, if the property's in decent shape and it's bank financeable, junkers are not bank financeable. But if it's in decent shape, decent meaning condition, and the bank will finance it, you can sell on terms as is, and then the buyer cash you out as soon as possible, or you could sell as is, 7-day sale. Have you guys heard of 7-day sales? There's a book out there. It's called, written by a guy named Bill Efros, and I believe it's called Sell Your House in 9 Days, and it's all about doing a round robin or sometimes what's called a silent auction on your house. If it's a pretty house, it needs no repairs at all, well, then you can sell it on terms as is, assuming you've taken it subject to or have long-term financing, or sell it on a 7-day sale or a 9-day sale. Just as a quick aside, and then we'll move on, if you're interested in that 7 or 9-day sale, you read that book. I've learned the hard way that junkers don't sell well on the silent auction strategy. It's the nicer houses that do. So then I created this little matrix at the bottom of your page 90 so that you can kind of look at that and visually see what your exit strategies are, considering the situation with the house. So if your exit strategy is to wholesale, we won't do repairs, we may need funding, we won't have tenants, and yes, it will generate immediate cash. If our exit strategy is to retail, it will require repairs, it will require long-term funding, there won't be any tenants, and it won't generate immediate cash. It could be 60, 90 days or more. And if we're going to hold on to the thing, we may need to do repairs. It will require long-term funding. We may have tenants, and you might say, well, how do you hold a house and not have tenants? Well, you could sell it on terms and turn that tenant into a tenant buyer, and that mindset is completely and utterly different and better. And no, that will not generate immediate cash, although maybe a little. When we sell on a lease option or an AITD, we collect a non-refundable down payment, and then they cash us out down the road when they're able.